despite the markets digesting a lot of news flow this past week, such as the possible Department of Justice investigation into Federal Reserve Chair Jerome Powell, concerns of possible military action in Iran, which then eased, worries about Greenland, US bank earnings, just to name a few. US stocks are still set to end the week flat, and the US dollar is on track for just 0.1% gains. Gold and silver have also eased from record highs. Now, to talk about what to watch this coming week, I'm joined by Global Head of Content, John Kicklighter. Thank you for joining us, John.
Thanks for having me.
John, let's start with market conditions. What should we expect for next week, and what markets are you watching?
So we continue to see this lack of conviction either way, and that lack of conviction is not just a focus on theme, it's also a lack of focus on trend. So while we are seeing benchmark risk measures at record highs, you're really not getting any kind of consistency and follow through. So something of a hallmark of the holiday fade and the recovery, but we need to see what picks the markets back up, because the longer the markets linger and lack a driver, the greater the risk is that it's going to ultimately end with a move to the downside. So unwinding the exposure of risk that investors already have. Now, I think that the traditional fundamental themes are going to probably struggle a little bit more to generate that kind of traction. It's probably going to be exogenous or unpredictable catalysts, like some of the things that you mentioned, the geopolitical risks in the United States in particular, or there's lingering concerns about Japan intervening on behalf of its currency. Those types of elements that can't be well priced and thereby discounted as being not market worthy are more likely to generate that kind of volatility. So in terms of the conditions that I am approaching with, it looks more like these are range-based conditions, although given the proximity to such record highs for like the US and global equity indices, and the just constant news flow and headline flow, it's also a watch for breakouts or short-term breakouts. What we are not seeing, though, is a trend with momentum. We're not really seeing a good environment for what they call sell the volatility, because volatility is actually quite low. There's not a whole lot of premium into that, and certainly not large swings. We can see some movement in terms of the relative risk, so selective risk appetite. But those are more the conditions that we are seeing. And in terms of the markets I'm watching, it's really that relative exposure, not really the outright, let's say S&P 500, but rather the S&P 500, which is a market cap weighted, versus RSP, the ETF that's an equally weighted S&P 500 representative, or the NASDAQ 100 versus the Dow, the tech versus the blue chips, or the Russell 2000 versus the Dow, the small cap versus the large cap. And outside of equities, I'm still watching gold and crude oil because of those large fundamental themes. And also in the FX world, the dollar, but more notably the dollar yen.
And then what about themes? What do you see as the key themes for this coming week?
So there's a lot of conversation going on. You have to wade through it. A lot of people will seize upon what they think is potentially market moving because it is headline dominant. But headline dominance does not translate into actual market traction. So we have to be a little bit more selective in what we are following. So something like the dollar debasement perspective, I hear a lot about this, and it's attached to the gold and silver charge. But the dollar itself is not necessarily just dropping against gold. It's also all the major currencies together. So not really a theme that is really garnering traction and explaining the market, but it is very popular. We can also see, let's say, in the event risk that we're seeing over the coming week, a likely focus on growth or economic activity. We have actually China's GDP, we have PMIs for the month of January, we have the updated World Economic Outlook growth forecast, but those aren't really controversial themes right now. They're pretty staid, and everyone's stoic about economic activity as it stands. And then the week after, we're going to have earnings, the return of monetary policy, because things like the FOMC. So it's not really these traditional themes. I'm really going to keep an eye on those unconventional catalysts, because that's really the thing that has the risk potential of overriding this inertia, because speculative appetite is really the few things that has the asset border transmissibility. And a lot of these other fundamental themes are not going to be able to charge it. They're not going to be able to kick it off. So I'm watching sentiment itself and keeping close eye on the headlines.
And then as far as top event risk to be watching next week, I mean, obviously this week we had US CPI, we had retail sales, there was quite a bit on the economic calendar. What are the main event risks for next week that you're watching?
So it's going to be a little lopsided again because we have a US-based holiday. The Martin Luther King holiday will take US markets offline, so it will be a little bit thinly traded. That's interesting because we do have Chinese GDP. So this is the first major economy reporting its major economy, its growth forecast for or growth review for its fourth quarter. They also have their December numbers, and then we're going to have the IMF. So we're expecting the IMF, so World Economic Outlook update. So those are noteworthy, but I don't think that's enough to really override the fact that you're going to have a all-in liquidity. When liquidity returns on Tuesday, it's a relatively light docket. The Chinese PBOC is going to update its interest rates, and they're not expected to change. You get some UK jobs figures, which is noteworthy, but it really doesn't start until Tuesday after the US close because we then have Netflix earnings. It's been a little hit or miss in terms of whether Netflix can generate greater traction in global equities. So keeping that in mind, Wednesday we have the UK inflation statistics, CPI, RPI, PPI. And we also have an expected statement from Trump from the World Economic Forum, which will be going through the week. Thursday is really where I think things get much more interesting. We have South Korea's GDP, we have Japanese trade balance, Australian jobs in the Asia session. During the U.S. session, we have the U.S. PCE deflator, which is the Fed's favorite inflation indicator, but it is only for November because of the delay that we've had on the government shutdown still carrying over. We'll see if that nudges the expectations for the following week's FOMC rate decision one way or the other, but it's unlikely until reports after the earnings after the close. And then on Friday, it's going to be very heavily Japan with the Bank of Japan rate decision and its monetary forecast. That's going to be certainly one worth watching, although they're not expected to change. But given the political turnover there, as well as the speculation around intervention, it's going to be a very closely watched event. Then we also have the January PMIs, definitely a timely growth update for a broad set. And I'll also be watching the final reading of the University of Michigan Consumer Confidence Report because we have seen a lot of focus on that one, and it has been quite a volatile series, and it's still very close to its series low.
Well, thank you very much for your insights once again, John.
Thank you.
For more videos like this, please do like and subscribe.